Hi, everyone. I'm Ivan Biyuki, and welcome back to Wall Street Silver. Joining us today is Lawrence Lepard. He is an investment manager, sound money advocate, and a gold stock fund manager at Equity Management Associates. Lawrence, welcome back.
Thanks. Great to be with you guys. I always enjoy talking to Ivan and Jim.
Oh, it's an absolute pleasure. Lawrence, you've spoken in the past about the Crackup Boom. Number one, how do you define the Crackup Boom? And number two, what are the signs that you see it's happening right now?
That's a great question. I wrote about this in my quarterly report, which is available on my website. But in general, a Crackup boom occurs when the money really loses value quickly. And, let's take a recent example, Venezuela, in the last 10 or 15 years. I mean, if the money is losing value, the price of everything defined in money terms goes up. So you can actually have people think, well, if you're going to have inflation, the stock market can't go up. And to some degree, that's true. In a traditional inflation, but when you have a Crackup boom inflation, the stock market might go up enormously because, again, stocks represent a claim on a business. And so the Crackup boom is when the currency rapidly loses value and the price of everything goes up very, very rapidly. And it occurs when the monetary authorities basically lose control of the narrative and the money supply. And they print too much money, they create too much money, they don't rein it in, they hold interest rates artificially low, all the things that we see kind of going on now. And there's some evidence, we're definitely not at a full Crackup boom stage now, but there's small pieces of evidence that we're kind of close to it.
Well, that plays into something that you just tweeted out the other day from Frank, his column. Not sure where to invest. The Fed's forced everyone to play a form of Squid Game with our money.
Yeah,
good money is chasing out bad money. That's sort of
well, it's so true. I watched that Squid Game. So my kids said, you got to watch this thing. And I watched it. That episode where they started shooting everybody. I was like, oh my God, this is horrific.
Another one that's been hot, a recent milestone we've reached is 30 trillion in
right.
in debt. Hey, we did it. We're number one. Still,
we are number one. Yeah.
Yeah.
The scarier part is I saw somebody take the most recent, 18-month run rate and extrapolate it. And it was like, I think it was in 5 years, we'd be at.
I actually have that ready to share right
Thank you very much. Perfect. Thank you. Wow, you are on top of it. Yes. In just 4 years, at the current rate of growth, we'll be at 52. Good God. Yeah. And this is what I've maintained all along. When you've got one of these systems that's built on continual growth of debt and credit, you have to continue, and in a sense, it's a Ponzi. You have to continually increase the size of the numbers we're talking about. And I also had a tweet, you probably saw it, where I showed that, it showed the time it took. It took 3 or 4 years for the Fed in 2008 to go from, $800 billion balance sheet to 3+ trillion. And this time it took, we added 3+ trillion. This time we added 4+ trillion, and it took us 18 months. Here's my tweet on this topic. As you can see, QE 1, 2, and 3, we created 3.625 trillion over 6.7 years. QE 4, this one we're in right now, 4.7 trillion, so more in 1.9 years. And I think, QE 5, what is it going to be, 10 trillion plus? I mean, it's, the Fed is headed to a $50 trillion balance sheet. I mean, at the rate they're going.
Would QE 5 be when if the Fed realizes in this tightening cycle we're in right now that they can't taper, or they can't, let's say they do one, I think they got to raise rates at least one time just to save face. They've made so much noise about it.
No doubt.
But if they quit, and let's say the market tanks 20-30%, whatever, and they're like Nancy Pelosi saying, my calls are underwater, I'm losing money. And Nancy Pelosi puts too much pressure on them, and they go back to easing. You think it's going to be like a $10 trillion easy money type of?
I think there's no doubt. I mean, so the Fed has 3 mandates, right? They have full employment, price stability, and a third mandate that's not written in, but they've said that's more or less a mandate, which is financial market stability or continuity. And so I'm with you. I think they have to, in order to save face and try and cool the absolutely roaring inflation that they have. I think they will probably do 2, 3, 4, 5 rate increases. And I think they will probably eventually start to legitimately do the taper that they're talking about. The unknown question is, what will happen when they do all of those things? How quickly will it be before, the Ponzi starts to seriously unravel? And we know that, and so the Fed put is the thing that represents that we will defend the markets at any cost. And so, the stock market's down 20 or 30%, the US bond market goes no bid, whatever it might be, there is another Powell pivot coming, in my view. We don't know when, though, and it might not be. Some people think, oh, it's almost going to be immediate. My view is it's actually it might take some time, and they're trying to be serious about it this time. There's a guy on Twitter named FedGuy12 who used to work at the Fed. He's done a lot of videos and so forth. Very useful source of how the Fed thinks. And they're kind of like Mr. Magoo. They just kind of stumble along until something breaks. And so my sense is they're probably going to go too far on this tightening thing, and then something is going to break. And then when they say, oh my God, this is breaking, we can't have that, they're going to reverse course. And oh dear God, I mean, at that point in time, in fact, it's possible that that's the last one before we go to full collapse.
Well, we've interviewed Danielle DiMartino Booth, who I know you probably follow.
Yes,
her
I know
also.
her.
Yeah, she and her comment was the Fed employees, all the PhDs there, they're very monolithic. There's no independent thought within the Fed, because it's made very clear very early when you're working at the Fed, you don't rock the boat, you don't do studies that go against the narrative,
or you're done.
You stay on the straight and narrow, otherwise you're out of there. And that's why,
there's a great book on that I just read that I highly recommend, called The Lords of Easy Money, which is a really excellent view of how they hate dissent. And this guy, Thomas Honig, was a dissenter, and tells the story of how it played out for him. And, it didn't do his career any favors. So yes, the Fed thinks monolithically, and they're a political animal. And right now, Biden and others are screaming that this inflation is eating us alive. So they got to fight inflation and hope it comes down. It's not going to come down. I mean, if you ask me, as Soros and Druckenmiller and others have said, if you're an investor in the market, you have to always look at, say, what's the prevailing thing that's wrong? And I think the prevailing thing that's wrong, and you can see this if you look at the 10-year, inflation expectations, is that inflation is going to calm back down, that we're going to go back to the deflationary world that we had, from the 80 period all the way into 2020.
I don't know if you saw this one. The Bank
I
of
missed that
England,
one.
This just came out, and I tweeted it out. Bank of England is asking workers to not ask for salary increases just to help the country, keep inflation in check. And a lot of people are finding this one particularly ridiculous.
That really is. That's, that is so annoying, so disingenuous. And so, we should suffer and we should sacrifice because you guys have screwed up. Oh, please. I mean, the central bankers of the world are what have created this system and what have driven this inflation. And I mean, we're going to suffer with higher inflation no matter what. But to say we'd hold off on pay increases, I mean, God, that comment is so wrong at so many levels. I can't even begin. I mean, he doesn't even know it, but he actually needs higher inflation. I mean, that's the thing. I mean, I think some people in the Fed are actually smart enough to know that they need higher inflation. The reason they do is that the debt is 130% of the GDP, or actually it's come down a little bit, it's like 125, but the debt is an enormous percentage of GDP. And without inflation, there's no way we get back to any kind of a normalized, operating environment. And so they need it. And my sense is what they're going to try and do is they're going to let it run hot, talk a lot about how they've got it under control, talk a lot about these tough things, but move slowly on doing them, and then just pray that nothing breaks.
Yeah.
And what I would submit is that, just like the repo blowout or the taper tantrum, I mean, Powell's two prior experiences with messing with the market, I would think the market's going to school him. Now, that could happen tomorrow. That could take a year. And so, one of the things I know for all of us in the sector, precious metals, I mean, it's been frustrating since August of 20. We haven't really made any money. And so you can look at that and you say, well, this really sucks. I haven't made any money in this time frame. The way I prefer to look at it is to say, oh my God, because I have new capital coming in, and I sold some things at the top in 20 and so on and so forth. The way I prefer to look at this is, oh my God, there's some incredibly good situations here that are incredibly cheap. I mean, this is, I think you mentioned in the pre-talk, Rick Rule is saying, I've never seen, such value in my life. And that is true. I mean, now we got to wait until the trend turns in the other direction, but I've got, 2, 5, 10 baggers laying around all over the place. So that part of it gets me pretty excited.
So I know you're one of those, you're the type of guy who believes both in physical and in the mining stocks. So there's a place for both in your portfolio.
I do. I mean, they, the different risk characteristics. I mean, obviously the physical, it's been mined, you hold it, it's private. I love that. You know, and it's going to go up, and I think there could be a big reset. I mean, people probably heard me say this, but I think a lot of people don't fully understand. I mean, some people, the Bitcoin people say, well, there's all kinds of, the monetary premium is going to come out of the physical. Well, there's no friggin' monetary premium in the physical, and not much of one. It's been beat up forever. I mean, if we went back to a 1970 style gold standard, gold would be at $32,000 an ounce. I mean, the price of gold has been severely suppressed. I mean, silver in the 20s is the only commodity in the world that hasn't surpassed its all-time high, which it hit in 1980 on the Hunt Brothers thing, and then it hit again in 2011. So these metals are going to go multiples higher of where they are today when the next upwave of inflation begins. But as I've said in the past, you got the Fed driving this clown car of, it's too inflationary now. We got to swerve towards deflation. We're going to tighten. And they're talking it all, and the market's buying it, which is stupid, but they are. And that's fine. We're going to swerve in that direction. But guess what? We're going to hit that guardrail, and it's going to be something's going to blow up, something's going to break, and they're going to pivot again, and then they're going to go in the other direction to make sure the world doesn't end. And on that next one, gold's going to go through its old high of 2050. Interesting, the 2011 high was 1900. So we kind of got almost a double top there, which when we take it out, and I think we will, gold's going to squirt up to $3,000 in a heartbeat. And the mining stocks, you mentioned that the mining stocks,
which ones do you have any?
Oh yeah, we
share with the audience.
So I love all of them, and I have a big mixture. And there's this whole incredible risk spectrum from big solid producers that I like take a Kinross as an example. Medium growing producers that I like GCM Mining, which is a huge holding, one of my favorites. I profiled it in my most recent quarterly report. And then, the smaller spec stuff that, has just been left for dead and selling dirt cheap. And if it works, and I believe they will, and if gold's not going to 1,400, and I don't think it is, we'll re-rate higher, 2, 5, 10 times. And I think we mentioned, I take you through some names there. One I'm doing right now and we've done recently, and so I should say, let me just introduce a guy that I think you've had on your show in the past. I think he's an excellent, mining stock picker and investor, a guy named Michael Gentile up in Quebec. And I've invested alongside him in a lot of things. And he's actually recently done a couple of these companies. He might do the third one, but there's a deal going down right now in clean air metals. And all these companies basically are, market caps under 50 million bucks. And, big resources, big projects, big MPVs, and with any kind of success, at taking these things forward, they're going to sell at multiples of today's value. I mean, this is an excellent management team. They did it once before. The mine just up the road, created over $1 billion of value with a very similar looking deposit.
Wow.
Clean air metals, that's it's platinum, palladium, right? And it's in Canada, correct?
Right.
And that's unusual in that most of the platinum's coming out of South Africa, correct?
That's exactly right. And it also has this beautiful ESG piece of it, right? I mean, as you know, those metals are very important in that area. So this is just it's a great drill development story. It's incredibly cheap. You go look at a chart, it's at a low. I mean, I can bring it up here, but this thing is, in my view,
let the audience, if the audience wants to research it on their own,
exactly.
You're just saying it's a name worth looking at, right?
Yeah, exactly. It's very much a name worth looking at. Another one that I'm involved in, I'm a director of, and I feel very strongly about, I think it's going to work, is called Rise Gold. So this is out in California. This is a prior producing gold mine that produced up until 1942. They took 2.4 million ounces out of this thing. It's super high grade, quartz hosted gold. We think there's at least 2 million remaining ounces, maybe 6. And when it was shut down, it was producing 100,000 ounces a year at with a head grade of often in the teens, sometimes a little lower than that, sometimes as high as 20 or 30 grams per ton, which is, we all know, is very profitable. And so this kind of looks like the mine that Wesdome runs if it were running. It's not. And Wesdome's got a market cap of $1 billion plus. This has a market cap of 25 million, something like that. So the issue here is we don't have a permit yet. We believe we have a path to a permit. We've got a clean environmental report. The county supervisors in the county of Nevada County vote on it. There are 5 of them. We think 4 are in favor. And, that vote is supposed to happen in June. if this company is able to get a permit, we're going to turn this into a mine that's going to be a thing of beauty. So that's another one I like. Another drill story. Well, let's go to Guanajuato, because it's a development story that I've been in since the beginning. And this James Anderson, who runs this, who and we've all talked to, is in my view one of the best mining execs out there. And he cobbled together some deposits in an old mill. He refurbished the mill, and he's pouring ore now. And this was mismanaged when it was with another company. At one point, this property sold for $200 million. James assembled the whole thing for less than 20. Wow. And, in terms of out-of-pocket payments, and he's got it producing silver, and it's a rich district. There's all kinds of unexplored land. There are a lot of mill improvements that can continue to be made to push the throughput, and he's cash flowing today. So, and the valuation is modest. I mean, it's in the 100 million, just sub 100 million area. So,
well, let me tell you a quick little story he shared with me about their tailings facility, and that's become an issue in Mexico. Right. So he's got 4 years worth of tailings facilities permitted already for Guanajuato silver, and his neighbors, some other mines nearby, have already capped out on their tailings, and they can't get extended. And right. So other companies are coming to him with their ore that he's able to pick up at a discount to start processing. So, he's in a sweet spot in Guanajuato with he's got spare capacity in the mill, and he's got the tailings capacity to operate.
Yeah, I spoke to him a few days ago, and he mentioned that. He said he'd cleared $250,000 on some of that ore, just a small batch that he processed. So he's really got it going on, and he's got a vision for how this whole district can become a lot larger. And he's got the right Mexican partners that are local and have been there forever. He's got one of the senior guys who used to be at First Majestic and helped build all the First Majestic mines on his team. I mean, it's a good situation. I fully expect that this thing will be multiples of today's value, in the years ahead as he increases production and as multiples expand and the silver price goes up. I mean, obviously with all of these investments, the higher metal prices make them all. They work at today's prices. They really work with higher metal prices,
And there's now some stranded assets nearby from these companies that don't have the tailings permits, and they've now had to go into care and maintenance.
Yeah, he's got a vision here that could lead to this thing producing multiple millions of silver ounces per year. Wow. And that doesn't happen overnight, right? I mean, it's going to take years for this to unfold, but I'm perfectly willing to wait, and I think he will be able to achieve it. What he's done thus far, if past his prologue, I mean, what he's done thus far is extremely impressive. So I don't expect him to mess it up. So I think there's a lot of upside in this one. Another one that's a drill story that's back over in Canada is Calinex. This is an incredibly high grade copper mine, or could be a copper mine. I mean, it's up near the historic and famous Flin Flon mine, and which is a huge copper mine. Same structure, super high grades. I mean, some underground copper grades of 4%, 7%, that kind of stuff. And again, just beaten to shit. The market cap is low. Nobody knows it's there. Nobody really understands it. But if you're a geologist, and I've had geologists who have paid look at it, and they go, "Wow, this is lights out. These are great copper grades." And so, I believe they're going to, continue to daylight and drill and prove that they have what could be a real world-class mine here, a huge deposit. And when you get into something in the kind of $30 million market cap, I don't know if that's exactly what it is, but that's my last memory what it was. Yeah, that's exactly what it is. Calinex showing $30 million Canadian market cap. It's on like a low. To me, that's just like, I mean, they're just begging you to come over and make money. Now, nobody likes this thing right now, and you look at the chart and it looks like shit. But you study it and you go, well, okay, if they turn this into the company, I think they could turn it into, it's worth at least 300 million, and it's maybe worth $1 billion. And even if it only goes to being worth 150 million, that's 5x your money. So to me, it's a very interesting situation. So
you know what I like about this? It's in Canada. It's well,
that's the other thing.
Which is a good. I mean, we can criticize Justin Trudeau all we want, but it's still a good mining jurisdiction, right?
Absolutely. Well, the other thing that's interesting is the Flin Flon mine is kind of running out of ore, and it's up the road, and so there's there's a real natural transition that might happen in terms of, team and skills and people and all that. So, it's not lost on us that the Flim Flam people could easily kind of come down and start turning our thing into a mine. So that's an interesting and positive, aspect.
Oh, they've already got all the infrastructure, just truck the ore from Calinex.
Oh yeah. No, it's all there and ready to go. It's a good place to be. So,
gotcha.
And I mean, these are just 3 or 4 examples. I mean, I have, 50 plus companies in my portfolio. And that's one of the things I would emphasize that everyone who's listening to this is you never want to get too heavy in one name. I mean, mining is really the business of Murphy's Law,
Yeah.
Stuff can go wrong. It just can't. It doesn't matter. Even the best people, what you want is a good bet with good people, good deposit, good economics, where you think, okay, assuming nothing goes terribly wrong, this is going to work. But like you might think, okay, Larry likes Guanajuato, I'm going to go put all my money in Guanajuato. That'd be crazy, because Jim, as good as he is, something could go wrong.
Yeah, it's Mexico. They got a crazy government in Mexico.
So what you need to find is 5 Guanajuatos, or you need to find a group of them, because what, in one of them something will go wrong for sure, and you'll lose 1x. But in the others, they'll all work to some degree, and you'll make 2 to 10x. And so you blend it all together and it works. And I think that's an important thing for people who are looking at this to understand about this business. I mean, a big position in my fund might be 3 or 4%. That's a big weighting, right? Yeah. So it tells you I got a lot of names, right? You got to, know.
That's it. That's how Eric Sprott does it. He's got over 120 something names.
Right. And when things are working, and what he does is when things are working, he presses it. And when things aren't working, he slowly but surely sells out, or he just lets them go and says, okay, well, that was a mistake. Yeah. And you do have to be prepared for the fact that sometimes they don't work. I mean, mining's a tough business. It's an extremely tough business.
Yeah. Well, Larry, what do you prefer, Lawrence or Larry?
Larry's fine. You're my friend.
Okay. Well, it's Mr. Lepard to you, Ivan.
Oh, yeah, that's right.
No, God, no. Stop, please.
Well, thank you very much for joining us. It's always
fun.
This is a great conversation, great information. I love your perspective. Everyone, Lawrence or Larry, let me show you his Twitter account. Everyone. Yes. He's huge on Twitter. He's got 62,700 followers. If you want to follow a great account, I would highly recommend this one if you have a Twitter account. And he's always got great insight. He's always making great comments. Definitely.
Nice. I appreciate that, Jim. Apologize for the phone in the background.
It's okay. We'll talk to you again.
I got my dogs barking as my ringtone.
We'll talk to you again in the next 2 or 3 months.
Okay, thanks a lot, Jim. Always fun to be with you guys. Good luck. Take care.
Take care.